Both? Am I speaking like this the whole time? Hi. How are you guys doing? Good. Well, this is fun. Yeah, so Brett touched on a few. Thank you, Brett. Thank you, RobotX. This is a really great space. At Boost VC, we sort of throw our entrepreneurs in what we call the dungeon. They don't have windows. And so this is way nicer than what we provide. My name is Adam Draper. I'm a fourth generation venture capitalist, which means my dad and grandfather probably knew what they were doing. So actually, it's really funny that I'm supposed to talk on fintech. I'm going to talk on ICOs. I made a catchy title, which is not going to probably be covered at all during the entire presentation. But I actually started my career in fintech. I started a secondary market for private securities called Expert Financial. We were trying to facilitate the transaction of secondary securities. So where would you go to buy shares of Uber? Where would you go to buy shares? At that time, it was Facebook, Twitter. It was the companies that you can actually buy today. So I spent a lot of time in regulated spaces. I spent a lot of time dissecting what fintech actually is. And when I left that company, because for all intents and purposes I failed as an entrepreneur, we ran out of money. I left, and I found over time that I had made so many mistakes that I was able to help people not make the same mistakes that I did. And so I started mentoring startups, and it turned out mentoring in bulk is called an accelerator. And so I founded Boost VC, which we're an accelerator for startups focused on blockchain and virtual reality. Basically, we're trying to make science fiction a reality. Anything that gets me closer to an Iron Man suit, technically you could pitch me anything that's like in the realm of Iron Man, and I back it. We backed, I don't know if you saw the video of the flying guy, we backed that guy, the guy who actually has a jetpack flying, and I backed another exoskeleton recently. But what I am best known for, and what has been sort of an obsession of mine for the last 5 years really, a while ago, so about 5 years ago, I backed a company called Coinbase, how many people here actually own Bitcoin? It's pretty good. How many people have heard of Bitcoin? So it used to be like the inverse, like it was the opposite. It was like no one knew what, it was like this small group in the corner actually knew what Bitcoin was 5 years ago. Like I was able to, I would ask that question and I'd have to actually start from the beginning and explain the whole entire system. But I learned about Bitcoin very uniquely from Brian Armstrong, who is the CEO of Coinbase. And by the way, how many people have a Coinbase account? So like, that is the number of people who own Bitcoin. So like, that's cool for me to see. And so he sat me down. We were at a coffee shop in Mountain View, down the road, Red Rock. I don't know if you guys have been to Red Rock. It's good coffee. And he was sitting across from me and he was pitching me on his business, and he said, so we're allowing you to buy Bitcoin the easiest way. And I was like, I didn't know anyone was trying to buy Bitcoin, but so what is that? And he pitched me on this vision that got me to buy in for the last 5 years, which was creating a completely global financial infrastructure. And that was the thing that I bought into, hook, line, and sinker, basically, not right away, but basically right away. And I bought into him. He was a very talented person, and so I ended up being one of his first investors. And I feel very fortunate to be one of his investors. It's pretty cool. And so I ended up, shortly after that, 6 months later, I had started Boost VC, and we were trying to figure out where we wanted to focus, because it turned out that there were hundreds of accelerators within, I don't know, a stone's throw of where we work. And so no one had owned Bitcoin. No one owned it as far as investors. No one had taken the risk to actually stake a claim to it. And so I was like, hey, I got nothing to lose. We don't have a brand. And so what we did was we wrote a blog post and we said, we think these are going to be the big ideas in Bitcoin. We're going to back a bunch of Bitcoin companies. And then we became like a lightning rod for all of this activity. We know everyone in the space because it's such a tightly knit space. Someone brought up the idea of subcultures to me recently and how these tightly knit subcultures sort of like evolutionize and revolutionize the world. And this is what's happening in Bitcoin. It's like this tightly knit industry. If you had gone to any conference or meetup, you'd see the same people, and you still do. And that's how exciting and like optimistic these people are. They just bought into the philosophy of what Bitcoin was. Okay, so now we're gonna. How do I click? Like how do I do this? Am I gonna do this? I can just go. I can just keep going. So I prepared like a who, what, when, where, why. You'll literally laugh when I say that because every slide starts with like, what is an ICO? Who is a? Yeah, can we get? Okay, so I'll give you a little history of Bitcoin in general because does everyone understand what Bitcoin is? It is to money the way that email is to mail. Like that's the best way to think of it. It's a protocol of money. It is the language of money. You can program money. That is too cool. I can send anyone in the world who is hooked up to the internet value that they can cash out. Now they weren't always able to cash out. Like if I'd sent 5 years ago to some random person in rural Australia a Bitcoin, it would be worth nothing. But actually now there are exchanges everywhere. You can actually cash in and out pretty liquidly. Okay, who am I? I already covered this part. I don't know why it's playing, but we'll go to the next slide. Can you go to? Okay, what is an ICO? Okay, so I was giving you a history of the evolutions of Bitcoin. So we started with Bitcoin, which is really. I just bought into the idea that I was going to be able to travel around the world and not cash in and out of a currency, or cash in and out of currency, but it was going to be the equal value. There were no middlemen between that. And I bought into like, we are a global economy. That is an undebatable fact. And I think that the whole world gets affected if one country is affected. And so this was going to be, in my head, like a meta currency, like a currency that lay on top of all the other currencies. But then, Bitcoin got exciting, and then like Mt. Gox happened, and everyone was like, bad. And also, then Silk Road happened, where like people were buying drugs and guns with Bitcoin, and bad. Like everyone there were bad things that happened, and there were these like black marks on the history of Bitcoin, but it also made it interesting. Like people remember these stories because they have stories of what Bitcoin offered. And so what happened was Jamie Dimon one day, Jamie Dimon is CEO of Morgan Chase, he sat down and he said, Bitcoin's never going to work. And he said, but the blockchain, that's interesting. And so suddenly everyone was talking about the blockchain, like Bitcoin didn't exist and Bitcoin was a thing. So the blockchain does one thing. It replaces third-party trust with mathematical proof. That's it. That's all it does. Whenever anyone was talking about the blockchain, that's all they're doing. They're replacing third-party trust, the trust in someone, some entity, something, some brand, with mathematical proof that something happened. And it is just a constantly infinite running ledger of every transaction that's ever happened in Bitcoin. And so like suddenly everyone was like, oh, well, Bitcoin, like bad, illegal, never gonna happen because Jamie Dimon said so. And then they started focusing on the blockchain. And that was a really interesting time because suddenly there were all these venture capitalists who started funding the blockchain projects, and that was really, really fun. And me being one of them, and that was really great. By the way, at Boost VC, we've backed something like 65 blockchain or Bitcoin-related startups. We're constantly evolving and having to evolve because the space evolves so fast. And then the blockchain, like they would start, all these companies were working, all these blockchain startups were working with these big companies. And they sort of just were building products for banks or big institutions. And that was the business model. That was the business model of the day. Work for Visa, work for a bank, work for, and that was 2 years ago. And for a while, honestly, I can say it was like sort of, like the momentum was a little boring because there was so much infrastructure being built. And there was so much like value being created, but you couldn't see it. It wasn't on the surface. And so then all of a sudden, Ethereum like effed up the world, and that's why you're all here. So you know, Ethereum, Vitalik came along, and by the way, I am the first person to say I was wrong, okay, about what Ethereum was offering. I was so trying to focus on just the Bitcoin and the Bitcoin's blockchain that I ignored like other stuff that could have happened. And I saw Vitalik speak actually about 4 years ago in North Carolina, of all places. And he was passionate, and he's crazy smart. Like, that's what you take from Vitalik. He's like, he might know how finance should work. But suddenly the price of Ethereum like started taking off like a rocket because they created a smart contract to do ICOs, which is called an ERC20 contract. Okay, so what is an ICO? An ICO is an initial coin offering, which is, we shouldn't say that because regulatory reasons, it sounds too much like IPO. And that's something that I think hot topic wise I should probably cover is regulation. So if I don't cover it, just ask me that question after I'm done. By the way, I'm talking for like 15 minutes and then you guys can ask me whatever questions you want. So it means basically you're offering up a token to the world in order to build, I actually think of it as a business model for open source projects. Like suddenly you can actually own a piece of, like if this token spreads to everyone, there is value in that. There are network effects in that. And that's what people are doing. They're getting people to buy in. It is the best way to incentivize customers, investors, and users to build on your system. And that's the thing that was created by the ICO, making it easier to do this. Because Ethereum technically did the first one, and it took them 2 weeks to raise $13 million. By the way, okay, just so you guys know, if you bought into the Ethereum ICO, I did not, so I'm okay with admitting that. If you did, with 1 Bitcoin's worth of Ethereum, it would be worth, 1 Bitcoin's worth, by the way, was like $500 at the time. 1 Bitcoin's worth of Bitcoin into the Ethereum ICO, it would be worth roughly $300,000 today, which is a lot of money. And so that's the reason you guys are here, and that's the reason that like ICOs have become this hotly debated topic is because of Ethereum, because Ethereum effed up the world. And okay, so actually, how does an ICO work? So I have a podcast. I might as well plug that, the Boost VC podcast, and 4 of the episodes, the last 4 episodes, have all been token based. I recommend listening to them just for no other reason than to learn more about the process. By the way, if you guys ask me, should I do an ICO? My answer will probably be no, just for the record. Like, there are a lot of people who shouldn't be doing ICOs. I don't know if your project does. I just know 90% of the time people are doing things that shouldn't be ICOs. So, okay, how does an ICO work? 1, I have an idea. That's cool. It needs to be a protocol. That's cool too, because companies now, I think there's this huge trend towards decentralizing a company. Like, I think corporations, as we look at them today, are going to look way, way different in 10 years. And because of technologies like this, these are actually changing the way that we vote, the way that we implement changes, the way that we, like, if you look at every single ICO, they have all been different. Everyone has done, actually Vitalik has a great paper, blog post on how different every ICO has been and what changes everyone made and why. And it's super fascinating because basically we're creating, first off, they're creating like, does time-based ICO work? No. Does cap-based ICO work? No. Like, and so everyone's iterating on the previous one, and they can make any changes they want because it's the Wild West, and why not? We're trying things right now. This is an innovation. Okay, but back to the process. I have an idea. let's say, I like using the case of Filecoin because not everyone's heard of it, but it's also a really good use case for a token. So Filecoin is a project created by a company called Protocol Labs. It is the token of IPFS. And what they're doing is they are actually tokenizing file storage. So instead of, with Bitcoin, you have these miners, okay, that are hooked up and connected, and they're actually repaying you for the computing power that you're using. So that's what the mining system is. It's like the system is paying you for turning on your computer and using your computing power. What Filecoin is doing is they're repaying you for them being able to use your file storage. And it's a fascinating use case. Like, I actually think, I'm thinking like, let's buy a bunch of file storage and like flip it on and get all that token. Because the earlier, the better. But, so I have an idea, Filecoin. I'm gonna decentralize storage. Everyone's gonna be hosting the entire internet. That's the dream, by the way. That's what Juan is trying to accomplish. He's trying to allow everyone's computer to be storing the entire internet so that it is accessed by everyone. So no government can actually censor anything. They opened up, I think, the Thailand Wikipedia or one of the Wikipedia. It's fascinating stuff that's happening because of this. Then I write a white paper on my idea. White papers have never been so popular. Like it sounds like the geekiest thing ever. Like I write 3 pages and suddenly I raise $150 million. It's great. But the hard part about the ICO is actually getting the community to buy in. This is the cool part. Like, the community actually checks everything. They meet you, they meet the team, they check the code, and I think that the coolest part about this ICO world is the checks and balances being created by this community ecosystem all over the world. And I think that's the most fascinating element, where everyone's asking about how this thing's gonna get regulated. And yes, SEC is gonna step in when it's a security. That makes sense. Like, I'm not gonna debate that it shouldn't. If it is a security, but it's not always a security. I think there's a communication problem between what an ICO is and what a security is, and I think that they're not always the same thing. But I think that for the tokens, what ends up getting regulated is actually by the community. The community ends up saying, like, bad players, good players. And I think that's fascinating to me. Okay, so how does that set up? Then I go and I incorporate. But I don't incorporate the way that you would think to incorporate a company, where I'm a Delaware C Corp in the United States of America, because the United States of America is really bad for ICOs. So you would probably not do that. You will incorporate as a nonprofit in Switzerland, a NGO in Estonia, or there's some weird system that you can do in Singapore. But those are like the 3 ways that they do it, which means, this is another really, really cool thing, suddenly the United States is gonna be losing business. Like, people are actively, we are backing companies and things outside of the country because they don't want to be here because it's bad to be here. And they're not trying to do nefarious things. They're trying to do good things. They're trying to change the world. They're trying to actually create a new vision. And that's fascinating. And so suddenly the United States is going to have to be like, yeah. But why? Why is this happening? And it's going to be great. Like, the government has to compete with other governments. When has that ever happened other than war? It doesn't happen where regulation actually competes with other regulation. I'm really, really excited. People are going to compete for citizens. Like, that's the, I'm preaching 10 years out. I'm not preaching like today. I speak in decades. Okay, then after you've filed and done that, you get the community to buy in, and then you just set a way in which you're doing the ICO. And so the ICO could be time-based. It could be you have 14 days. Some people, everyone's doing pre-sales. So everyone's going around with their hat and fundraising so that they seed the entire system, so that they already have, on the Kickstarter bar, 80% full. That's what they're trying to do. I just got approached by a pre-sale. I don't even know what that is. Like I was in the meeting, they were like, well, we're pre-selling. I was like, what? What is happening right now? And it was a good idea, but I was also like, I can't do this. Yeah, before the. Am I getting kicked off?
You're out here.
Wow, I'm sorry. I just spoke
So
for like
it's been fascinating.
20 minutes.
We loved you.
We started about 7 minutes late, though. Just saying.
Wow, now we're negotiating. Okay.
Yeah, I'm just saying. Okay, give me one question, Brett. Give me one question.
No, I want to open it up for questions.
Oh! I thought we were kicking me out.
No.
I thought I was getting the hook.
We want to make sure.
Okay,
that we
I'm
get
sorry.
At least a couple of audience questions in while we still got you here. So this gentleman over here.
So, very going to subject because we are in the process of ICO. We've raised 1.7 million so far.
Great. I think that's a reasonable amount of money.
Yeah. So, how do we bring it to the US, efficiently and legitimately?
Sorry. Well, first off, I don't know what you do. So, like, that's probably a big question of like how to bring it to the United States.
Question in general about ICO. ICO is not regulated in the US, as you said yourself. You can do it only through one of those 3 foreign companies. And how do you bring that investment that you raised to
this is relative. This is a good question because this is about the communication of what an ICO represents. Is it a token or is it a security? Like, are you literally raising because you can? Like, I have a lot of people who are like, I would not have backed them. Like, we wouldn't have backed them. We should, and then they're asking for an ICO, and I'm like considering it. Like, and we still aren't backing them. But like, that's happening. And if you did it that way, that's fine. You raise the money to be able to execute on your product. But if you're treating it like a security, like, you will get registered, and you should go about it the right way. And you should probably go through the proper channels of just being like a registered security inside of the United States of America. Like, and that's the only way that it's going to work. Right now, I think retroactively, the companies that are going to work long term in the future in the US are the ones right now thinking about actually playing nice with the government and thinking about it and setting that standard. And so another reason I think Filecoin is really, really great is they actually are going through this appropriate channels. I hate it. Don't get me wrong. You're looking at me like, hey, I'm not the enemy here. But yes, I don't enjoy that. Like, there are these rules because it is a frictionless way to raise money, which is crazy. By the way, the coolest thing about ICOs. So I've always been obsessed with
One more question.
I've always been obsessed with the disruption of venture capital, and that's what's happening. I'm getting disrupted. Sorry, was there another question?
So there is a perception that ICOs are not now being used more for the fraudulent. You're not actually having any solid pitches or anything else. You just go by the white paper or whatever they're presenting. How do you really differentiate between the real one or authentic project versus fraudulent offers?
So honestly, I'm not technical. So I don't know if you got that. I'm not a technical person. I did lock myself in a room with my co-founder for 4 days just to figure out how an engineer thinks. And so we built things like tic-tac-toe and like a text-based adventure game. So that's about as far as I got, but which was fun. But what we do is we depend very much on our network. I've backed 65 blockchain-related startups, half of which are trying to ICO right now, whether or not it's the right thing to do. And we very much, the value, it's really funny. The blockchain is replacing third-party trust with mathematical proof. Most important thing during this ICO world is creating the trust with people. And that's basically what's happening right now. Like, it's a trust-based system where I trust, I don't know, they're like 10 people that if they send me something in that ICO world, I will definitely consider, no matter what. And because I respect their opinion, I respect what they've brought me before, and they're normally pretty heavily technical, and I think they're really smart and stuff. Yeah. Now I'm getting the hook?
Now you're getting the hook.
Wait, what? Okay. Hey, it was great to talk.
Thanks so much.
We're not. So just to give everyone a quick overview of what we do. So we are a registered investment advisory firm, meaning that we do manage money for people. And we've oftentimes been asked, are we a robo-advisor? Do we manage direct client money? The answer is yes, we do, but our real focus, to your point, Amilcar, is not that. We really try to take a B2B play where we're actually targeting other financial advisors, other independent investment managers, and also endowments, foundations, and institutions. So just to give a quick overview of what Just Invest is, all four of the founding members, including myself, we all come from an institutional investing background, meaning that we previously helped really large public pensions, endowments, foundations manage their money. And a really good story that I like telling is that before starting my role here at Just Invest, I was actually doing a meeting with CalSTRS. And during this meeting, CalSTRS is a very unique public pension. They have a lot of specific requirements when you manage their money, being that they're the California State Teachers Retirement System. They require their portfolios to not invest in tobacco, not invest in firearms, not invest in a lot of other controversial issues. And on top of that, they also want your portfolio to make money too, because at the end of the day, these are the retirement assets of the beneficiaries, a lot of the workers here in California. So how do you do that? Well, the way we did it when we were at MSCI is we would apply a lot of quantitative rigor into the portfolio construction process of their equity portfolios. We would run it through various different types of quantitative algorithms. We'd run it through different types of screens. And we basically give them this really customized investment portfolio that is completely unique and tailored for CalSTRS needs. And then when we look back, we were like, wow, that's really cool. I kind of wish I could do that for my own portfolio, but I don't have $180 billion to manage. And furthermore, you ask any other financial advisor out there, or for that matter, any other asset manager, they're not going to do it for you either. They're just going to tell you to put it into a mutual fund or an ETF. And that's really where we come in. After talking to now my CEO and my other co-founders, we have the exact capability, the same capability that we did for CalSTRS, but deliver the same product, the same service to any investor. And I won't belabor everyone into all the technical details, but that's really more or less what we do. We provide you a custom portfolio of individual securities, stocks, bonds, not mutual funds, not ETFs, that is completely tailored to your specific needs, but at the same time have the same quantitative rigor that we applied for the same portfolio for CalSTRS.
Got it. So is it safe to say that you would start with, let's say, my goals, and then you pick from a universe of securities the optimal portfolio, you construct that on the fly, as opposed to a predetermined set of models like Wealthfront or Betterment might have?
That's correct. So every single portfolio that we build for a client is a completely clean slate. In fact, if you all are interested, you can go to justinvest.com, and we already have demos already available where we have what's called a universe builder. It basically is a global equity, a large set of stocks, global equity in nature, and you can start tilting, screening, filtering the specific securities that are controversial to you in terms of alcohol, tobacco, firearms. You can also have it tilt towards more environmental issues, social governance issues, and also you can tilt it to specific fundamental issues too, such as high value or high quality or high dividend. And to the gentleman's question regarding how do we go through stock selection, we don't necessarily select individual stocks per se, but rather we tailor the universe to make it fit to the client's needs. But once you've tailored that portfolio, then we apply the quantitative rigor of making that portfolio as liquid, as similar, and as investable as possible to any type of stock index.
Got it. Any questions so far?
Yeah, so if you're B2B, then do you deal directly with consumers?
We do.
Oh, okay.
Yeah, I mean, we're not advertising it. At least, I guess I'm not. That's kind of a paradox now for me
Yeah.
saying this, but
You're on a public panel. How does that work?
as a proof of concept, we had to go find some clients, both friends and family and organic. And quite frankly, that wasn't that difficult to do because there really isn't that anyone out there who is doing this. And we know this because the 4 founders, including myself, we've been in the industry for 60 plus years, if you aggregate it all together. And we know the market pretty well, we know who's doing what, and people like customization. They like the ability to make their own choices in their investment options. And that's what we try to do. But that being said, to what we mentioned earlier, we are a B2B player in that instead of directly managing individual clients' assets, we're trying to partner with other people to provide our solutions through their practices. And I'll tell you why. I think one of the biggest assumptions or one of the biggest, I wouldn't say mistakes, but things that a lot of robo-advisories didn't consider is all the financial planning aspects that go into managing money. When you talk to a specific client, you're not just simply there trying to pick a stock or a bond, but you're really there to provide them financial advice. What do I do with my portfolio when I retire? What do I do with my portfolio when I get married and I have a mortgage and I have to pay for childcare and I have 2 jobs and I have 401ks, or I just got laid off and I need to balance my income or supplement my income from my investment portfolio? How do I deal with all these very, very delicate and intimate issues that come about from life? And you can't just simply model that through some sort of algorithm per se. And that's something that we looked at, and even though we like quant and we have a pretty decent quant background, it's something that we just can't simply mathematically calculate. So that's why we're also working with other B2B players, with other financial advisors, with other firms, because those experts can have those personal conversations with clients so that they can tailor fit their needs to our investment portfolios.
Good. Quick question for you here, Tim. As it relates to Corda and R3 in general, you guys have been in the news for partnerships with Intel or partnerships potentially with LG to power finance through your network, right? One of the interesting things about Corda is that arguably it was built for financial services. It has information sharing that is on a need-to-know basis, as an example. So privacy is definitely top of mind for some of these folks that are coming on board, right? Can you walk us through the regulatory landmines and what you guys have to deal with as you're going with 80 plus in your consortium already?
Yeah, so just to go back to that point, when people talk about the blockchain world or distributed ledger world, just keep in mind there's really 2 worlds within that umbrella. You have the consumer-facing cryptocurrency world, and then you have the enterprise side. And the enterprise side, the requirements that those customers have are very different than the requirements that a retail-facing product might have. And one of those is privacy laws in each of these different jurisdictions. So I want to do a show of hands real quick. Who has heard of a regulation called GDPR? Okay, so 2 people, you guys are going to make lots of money May next year. So GDPR is a regulation in the EU called the General Data Protection Regulation. And it activates next May. In Europe, it impacts any kind of organization, big or small, irrespective of what they do. And it has far-reaching implications on how privacy or how any kind of personal information, personally identifiable information, takes place. And when you hear people on stage at these events talking about how you could put everything onto a blockchain, well, many of these things you could, I guess, technically put on a blockchain, but you're probably going to be violating lots of laws. And as much as this community may not like, the overall community may not like, say, following laws, as we've seen with like ICOs and stuff like that, at the end of the day, regulators are going to do what they do, and that's regulate, and they're going to do enforcement actions. And so going back to this privacy question, from the get-go, almost all of our customers are large banks. We have a number of insurance companies, some other market operators as well. And if they don't feel that the system that we built, called Corda, is not compliant with whatever jurisdictions that these legal agreements or contracts or whatever is moving over on, they're not going to use it. So for us, it's an existential problem. Like if we can't solve the privacy question, we believe we have through some clever use of SGX technology from Intel and some other methods, we feel that we've checked enough of those boxes that we could start piloting things in the real world. We've announced some things related to trade finance. In fact, Mizuho and Cognizant, we announced about 6 weeks ago. It's a trade finance product that you'll hear more about at the end of the year. And the reason trade finance has actually come up earlier than, say, securities. By the way, who knows what trade finance is? Nobody. This is great. I'm not going to explain it to you. You're going to Google it after I talk, or as I talk, and you'll be experts on it in 5 seconds. So the reason trade finance fundamentally is one of the easier, lighter lift areas on the DLT world is because you're not actually moving money. And actually moving money is much more difficult, and you have to actually concern yourself with even more privacy laws. So if you want, it's turtles all the way down. That topic just is never ending. We could talk about it for a couple hours.
Sure. How about Veeam in this case, with all the different markets? You mentioned KYC, AML. You're also dealing with various types of risk beyond just fraud, right? The FX translation risk to go from fiat to, or actually from crypto to fiat currency. Can you walk us through an end-to-end of one transaction and sort of all the all the regulatory line mines / what you guys have to jump through hoops to actually make a payment through?
Yeah, so the typical payment, I mean, it's where the beauty of it. I don't know how many of you have done wire transfer, but when you look at a company, a small business trying to make a payment, if they want to pay, their service or whatever, their PG&E bill, it's super simple. You do an ACH, you send a check. There are many ways to do it. It's super easy. The problem comes when you want to send money internationally, and then you have to deal with the bank. Sometimes you have to go to the bank. Many banks don't have a portal that will allow you to actually do the transfer. Then the money goes into a black hole. So people talk about wire transfers. There's no wire sending money. It's called wire transfer because when it was launched in the 70s, I think the SWIFT system was launched in 73, was using telexes, okay? And so that's how old it is. And so what it is the money goes from a bank to a bank to a bank to a bank, ends up in the counterparty's bank. Everybody's taking a fee in the middle. They're applying an exchange rate. Usually the receiver of the money is completely captive of the exchange rate. And so it's not unusual for a $10,000 wire transfer to cost between the sender and the receiver's fees, all the Benededuct, all the intermediary bank fees and the exchange rate to cost $400-500. It's not unusual at all. Okay, so we simplify all that stuff. The way we do it is with 2 levels of innovation. The first one is on the interface. So we've built an interface that's completely online. You set up an account with Veeam. It takes about a couple of minutes. There's some verification that are happening in the background, so it's not quite as easy as Facebook, but it's pretty close to that. Then you set up a payment. You link your bank account. You set up a payment, and then we pull the money out of the bank, and then we pass it. So we have different rails to send money. Cryptocurrency, the blockchain. We use mostly the Bitcoin blockchain is one of them. We also use treasury rails where we actually don't effectively move the money, but we use a bank account in a country and a bank account, for example, in the US, and we're going to receive US dollar, disburse the equivalent in, say, in euro, and then pay the receiver. Once you've set up your payment, the receiver is going to receive an email, and the email is going to say, so-and-so is paying you. Then you click to accept your payment. It's a very good message to have. Someone's paying you. Sure, I'll take it. Then you link your bank account, and then we deposit the money. So that's how it happens. It's usually a lot faster because the rail, a treasury rail, there's no time. We're not moving the money, so it's very fast. Rails like cryptocurrency, usually we do next day in most countries where we do using cryptocurrency. In some cases, we still use wire transfers. We have partnership with some banks in corridors that we haven't yet optimized with the other payment rails. And that takes a little longer, but we keep the experience the same. The beauty of it also is you can track the payment. You know where the money is at all time. I worked. My first job was in moving goods, so I was involved with payments, and I would have suppliers telling me, hey, I haven't been paid. I'm not shipping the goods. I'm like, well, let me go to the bank. Let me get a paper. Let me fax it to you. Let me make sure that I have a proof that I've paid you. Now you can see it it's on the platform that the money is moving like a FedEx tracking number.
So since you're talking about moving goods and money at the same time, it almost implies potential contracts or release of funds that are contingent on delivery of goods. So call it an escrow, potentially, right?
Yeah.
And then you may also have settlements of currencies that in bulk become a standardized contract. So any applications, to the gentleman's question earlier, Any smart contracts that you guys are leveraging within your end-to-end?
We're very interested in that stuff. We're not doing escrow. I mean, escrow is a very specific license that we don't have, that we would need to acquire. But yes, there's definitely things that we could do there. I mean, we can think about conditional payments, like you ship the good, it gets to a point, you get so much of the payment, the goods get to another point, you get so much of the payment. We could think of very fancy applications like that. That's more on the visionary side. What I want to say about our company is that we're extremely practical. We invited to blockchain. I received while I was waiting. I received like 2 invitations to a blockchain event. We're very often invited to blockchain events. There are a lot of companies trying to understand what they're going to do with the blockchain. We came up with, we're not actually just a blockchain company. We use other payment rails, but we're very practical. We're all about sales. We're a sales culture in the company. We're always selling our product. We love our product. We're very passionate. But we have something that works, and last year we multiplied by 16 our flow, and we're on good track to do the same sort of performance this year. So this is the sort of thing that we're after, is to be very fast and to offer something that exists today. I mean, there's the vision that in 20 years there won't be currency anymore, but today they're currencies and they need to be moved, and and we make it work, and we make it work for customers who have a need for that.
Tim, any comments from you on smart contracts as it relates to potentially derivatives that the folks in the consortium? If the answer is no, that's fine.
Dude, I can talk about smart contracts all day. Like, guys, smart contracts, anyone heard the term? Okay, they're not contracts, they're not smart. Any lawyers here? All right. Lawyers, you're not going to be replaced. In fact, you'll have a lot more billable hours because everyone's going to screw up with the code, and they're going to end up in court. So seriously, guys, one takeaway from anything you do talk to me with is get good legal counsel for any of the stuff you're about to do in the cryptocurrency world, especially if it involves the crazy ICO stuff. If you're looking for lawyers, happy to give you those without even billing you. I'm not a lawyer, but I've talked to enough to know that there's going to be some bad news bears there in a little bit.
So I'll take a crack on that one. I worked at a place called BlackRock, which used to move a lot of money between multiple different counterparties. So if you were to do a credit default swap, you will have at least 2 parties, and in most cases, one centralized clearinghouse in the center. Same is true with exchanges of various currency, whether it's dollar for dollar, fixed for float, or cross currency. Let's say yuan trade, dollar versus yuan. So a lot of these actually follow a standard term sheet, which is codified in what people will call ISDA agreements. So a lot of those ISDA agreements can be codified into smart contracts, thereby making the adoption of blockchain and the application of blockchain to settle OTC derivatives a real thing. And so a lot of people have been playing around with this, but it doesn't work in every blockchain. There is not a standard blockchain out there, as we know. So in any event, let's take a couple of questions from the audience before we move on to another set of topics related to AI. Go ahead. You got to speak up a little bit.
I will speak up. So a question for Oliver in terms of, you mentioned in a normal wire transfer it's about $500 for moving between countries. How much is it for we? Is it significant or what's the?
Yeah, I didn't mention how much so I say no, the other ones are very expensive. I didn't say how much. We're about $600 for, no, I'm kidding.
1 to 2%.
No, we charge, absolutely. There are 4 types of fees in a wire transfer. So you send money, it'll cost you about $40. I mean, sometimes you have a deal with the bank, or sometimes the banks will give you a deal so they can charge you on the exchange rate. But say it's $40 to send money, it's about $20. I know Wells Fargo charges me $16 to receive money when I receive money from other countries. And then the intermediary banks that are moving the money, each one will charge, there's a fee that's called a Benededuct, which is a fee that they charge just for touching and passing the money through. And so those can be $10, $20 if you have a couple of banks. You can do the math. And then the exchange rate. So in many cases, say someone is billing me $5,000. Okay, so I'm going to go to my bank. I'm going to send $5,000 to Europe. The bank in Europe is not going to know what to do with $5,000. So So they're going to take the $5,000 and they're going to exchange it at that point, and it's a completely captive sort of exchange because the receiver doesn't even get involved in any sort of negotiation. They apply an exchange rate, and the exchange rate that they apply is anywhere between 3 and 5, sometimes more percent. Okay, and the way Veeam charges is we charge between 1 and 2%, 1 and 1.9% exactly, depending on the size of the transaction. And we don't charge any other fees, so the $40, all the other fees are gone.
Question?
So question again to Oliver, how do you compare with TransferWise?
So TransferWise was designed as an application for consumers. They're not really designed for small, medium businesses. You mentioned about partnering with QuickBooks and these kind of accounting packages. So those are the things that we're bringing. We're all about simplifying sending and receiving money. Most of our customers are actually based in the US, and they're sending money abroad. Okay, we also have customers from other countries, but we have our core base is based in the US, paying suppliers, paying contractors all over the world.
Yeah, go ahead.
Wow, you're real popular.
Oh, your last question for Oliver then.
Yeah.
I wonder, what do you look at how as a blockchain is, and then what's your edge over?
I didn't understand.
What is
so
the,
you mentioned
the differentiating factor of Veeam versus PayPal? Was one point I got. What was the other point? Yeah, okay, so that was perhaps the main one.
So why are you better than PayPal?
Yeah, PayPal is also an application that's mostly a consumer application. Our average average payment size across the company, the smallest we take is about $25, and then it goes up in the hundreds of thousands. But our average payment size is about $7,000. So it's really for trade payments, so payments of suppliers and businesses that are moving money on a regular. If you look at PayPal and if you go through the costs of PayPal, I guarantee you that PayPal's got a whole slew of different costs. It'll end up costing you a pretty penny. It's not really adapted at a trading for a trading platform.
All right, so this question is for the Just Invest team. As we know, there's a lot of data out there to mine, right, as it relates to securities, correlation matrices between oil and cows and whatever else in the middle. And so it seems to me that you guys have a very sophisticated system to crawl through a whole bunch of that data and then on the fly come up with a portfolio, as you said, right? The challenge might be over time rebalancing that portfolio, particularly if it's not indexed. So, but that's not really the question. The question ultimately is, can you talk about data, signals, algorithms? And I think from most of the folks here, you're at the bleeding edge of AI in general, and you must have, in a way, in order to backtest your portfolios, or at least, if it's quantitative, we've known that for a long time in finance. Nobody cared about calling it AI, but it is machine learning driven. It's either quantamental or quantitative based investing.
Yeah.
So you care to comment about the applications of various segments of fintech to your portfolio construction process and beyond, rebalancing and the likes?
Yeah, thanks. So I think the one real expertise that we hold at Just Invest is that we really do value data within our portfolio construction and investment management process. So, and this really kind of gets back to our background, previously working at MSCI, and then also there's another firm called Perio. And we don't necessarily create our data ourselves. Rather, we do a really good job of sourcing data from vendors and from other free sources alike. But more importantly, creating our own our own security data master, whereby we basically connect all the pipes in from all the different data, various vendor sources, put it together so that then our optimization program can use that data, run the portfolio, and then lastly, put in pipes in place to put that algorithm software back into brokerage custodians to trade those underlying portfolios on an ongoing basis. And it's not necessarily the sourcing of the data that's really difficult, but it's rather more just the ongoing upkeep of that data and keeping it organized, clean, and usable on a daily basis. And that's really what's going on, is that for every single client that we're managing money for, they have their own set of constraints and rules that we're applying a unique algorithm for. And with those rules and constraints, we need that data to fit into that so that our optimization process can run it, can test the portfolio out to make sure that's within the constraints of that day, measure how far off they are regarding those constraints, and then make the decision, the quantitative decision to either trade or not trade based on those rules. And that's really where our algorithm comes in. Now, I'll tell you right now, it's not that sophisticated, truthfully. And I know, Amilcar, you know this because you're at BlackRock. I know BlackRock does a lot of the same similar
It's
things.
sophisticated. Enough.
But the actual programs that we are using are in our previous professional careers. We actually built them ourselves. We're just now actually using it, but more importantly, using it for all investors as opposed to just the top tier institutional investor set.
Will we use the rest of our time for
Yeah.
Q&A from the audience?
Sorry.
I need the mic.
Oh, sorry. Go. Hand it around.
I get all the microphones.
Like to run the mic?
Any other questions from the audience? Go ahead, Mr. Greenshirt.
Yeah, I have a quick question, and it is about robot devices. So, is it just the advice or execution as well, which is done by robots?
I'm sorry, I didn't catch the last part.
Is it just the advice or execution also is done by robots? Like, do they consume their outcome themselves?
What's
For
the robot
example,
part?
It says we should do particular thing for this portfolio. So, is it automated, like the consumption of advice given by robots as well, or it goes another pair of eyes, which is human or portfolio manager or somebody?
So as I mentioned previously, I actually think it's really difficult to automate the intimate issues regarding financial planning, right? I mean, I don't know if anyone has gone through a financial planning analysis, but gone through a questionnaire, and they're asking you some pretty intimate details. It's like, what's your social security number? How much money do you make? What's your credit rating? These are really personal questions that a lot of people really don't like answering. And honestly, for me personally, I'd rather do it in front of a trusted human being source. So that, in that regard, that personal advice, I think there's a portion of that you can automate through a questionnaire. But I think having those really deep, intimate discussions, especially of like, I want to leave my money to my second child, but not my first child, because I know that first child won't do it well. I've had those conversations before. They're not fun, but they're needed. They really are needed. So that part, I think that's not. I don't think you can really automate. What we try to do is once those rules from that financial planning is in place, then we really automate the portfolio construction process, which is very similar to what a lot of the largest asset managers and asset owners already do on the institutional side, but is not available for regular investors. And that automation in terms of tracking error calculation, covariance matrix optimization,
Tilts and factors.
Tilts and factors. Thank you, Amilcar. That's what we really bring in terms of the automation in terms of the tilting.
We have time for one more question. Anyone else with a question?
You already asked one.
Question for Trevor as well. It seems like most of the asset management world is moving towards
Index-based?
passive investing.
Yep.
And basically you're in an active management position in this company.
We're actually all MSCIers, former MSCIers.
Sure,
So-
but it seems like you're giving personalized portfolios for stocks, not really ETFs or mutual funds, which are, unless you're proposing buy and hold, which is.
So we very much are within the vein of passive, or rather I would like to refer to as index-based investing. So MSCI, for folks who don't know, they're one of the largest stock index firms in the world. They're MSCI, S&P, and FTSE Russell are the largest stock indexers. In fact, they made a lot of headlines just recently because MSCI they run the emerging markets index, and they just recently included the China A shares in the emerging market index, thereby potentially moving trillions of dollars into the China market. We build custom portfolios, but we start with the index as our starting palette. And once you've tilted, sliced, and diced that portfolio, what we then do is we re-optimize the portfolio to get it as similar and as in terms of likeness, tracking error, as that index as possible. It's not the same. It's not the same in terms of the constituent makeup, but in terms of weighting it correctly to make it as similar to the index as possible. That's really the work. So our real job here is to basically provide you index-like returns, but with all your values imbued into the portfolio.
Excellent. Well, let's give our panel a round of applause.